Over the past few years, I've talked about a number of different crypto exchanges that I use consistently, from Coinbase to KuCoin to Binance to many of the other top exchanges. And I use a lot of these platforms for spot trading, for leverage trading, and just for day-to-day activities. But the place that I use all the time, and what I've consistently used since its inception back in around 2017, 2018 for earn features and generating passive income on my crypto holdings is Bitget. So if you're not familiar, Bitget is a top 4 crypto exchange by volume according to Cointelegraph research. It is a leading futures trading and copy trading platform. If you haven't seen it already, they have hundreds of thousands of followers on Twitter. They're one of the largest by far. They have high liquidity with an average of $10 billion of daily volume. They have 20 million users, over 550 coins supported, and they are a pretty international company with 1,500 employees from over 60 different countries. Recently, they've announced major partnerships with Lionel Messi, which you can see they talked all about on their platform and on Twitter. And in September of 2023, they celebrated their 5-year anniversary because they launched back in 2018. So this is a platform that has all the boxes checked in terms of being up there in terms of daily trading volume. They have major partnerships. They've been around for now 5 years, and this is a platform that I don't use for leverage trading, but I use for all of my passive income crypto features. So if you look at it, they have about 6 main features that I want to go over in today's video, from like their flexible savings to a feature called Shark Fin to a feature called Smart Trend, Range Sniper, Dual Investment, and Snowball. All of these offer pretty consistent returns and high APY for you if you are looking to, generate passive income on your crypto holdings. These are ideal for people who maybe don't like trading their crypto so much, but just want to consistently benefit on top of just their general returns. Let's say you own Bitcoin or own Ethereum or have some USDT and you just want to hold it, but you don't want it to just sit there and not generate any returns. Well, this would be the perfect situation for you. This is what I do with all of my crypto that I don't trade. I keep it on Bitget and generate some passive income with their different earn features. One thing that I do like about Bitget before we get into these earn features is that their security. They have 0 security incidents recorded, and they have a Bitget protection fund, which is the second largest user protection fund among all centralized exchanges, with over $300 million, which you can see they talk about all right here. They say that their current fund is valued at right around $350 million US dollars, and this is something that is very, very important because it ensures that Bitget users are protected. You don't have to worry about your funds, and ultimately it gives this platform like an extra layer of security and resilience against cybersecurity threats, which we have seen happen over the past few years, especially in the crypto space. On top of this, they also have proof of reserves, which is updated every single month to ensure at least a 1-to-1 reserve ratio of their customer funds. And if you look at that, you could see all of the information. You could see their audit, GitHub, and as of their latest reserve ratio, you can see it's a snapshot that was recorded as of November 2nd. You can see there really is nothing to worry about. The reserve ratio is well over 100% for all of the major cryptos, from Bitcoin to USDT to Ethereum to USDC. So these are just some basic things. Now let's dive a little bit deeper and talk about these earn features, because these are what I use on Bitget. And like I said, I use other exchanges a lot of the time for trading and leverage trading, but Bitget I use primarily. It has the most amount of my money on it because it is where I generate passive income. And I like to not always be trading and using a lot of risk. I like to have a little bit more safer, a little bit more secure way to earn returns on my crypto. So the first feature I want to go over is called flexible savings. So flexible savings ultimately is a way where you can earn daily interest on your crypto holdings. And this is something that is very cool in my opinion. So you can see it's just called savings right here, and you can redeem daily interest simply with one click. So you can see that they have a number of different options for you to choose from different cryptocurrencies to different periods. I like to use, more of the stable cryptocurrencies, let's say like USDT and BTC for this particular product, and for, let's say, USDT. They have a 7-day period where ultimately you go ahead, you click subscribe. When you click on subscribe, it's going to say, look, 30% APR with a 7-day lockup period. You can see right here it says the minimum investment is 1 USDT, but you can do however much you want. The cool thing about this is that you start earning interest instantly. So it's a very simple, intuitive product. You could see that if you were to do it today, the time I'm filming this video at, let's say, 11/26, November 26, you would start accruing interest at November 27th at 11 a.m. So you could see that it is something that's very simple and intuitive, and then it shows you when you would start actually just getting distributions of this interest, which would be on 11/28. It gives you everything, clearly laying everything out. You know, it's a 7-day lockup period. It shows you the subscription time, the accrual start time, the distribution time, the expiry time, and the crediting date. So everything is very simple, intuitive. And the thing I like about this is that with flexible options, let's say you do something with BGB. When you want to do flexible, well, you can redeem your tokens at any time. You don't have to be locked into a 7 or 14-day period. You know, obviously the APRs change, but that is something that is really cool. The second feature is called their shark fin feature. With shark fin feature, the thing that is pretty interesting about this is that it allows you to earn passive income by balancing risks and rewards using like high APR and financial derivatives. If you look at Sharkfin and you look at what it says about it, you could see it brands themselves as guaranteed yields in volatile markets. You can see that there are a number of different options to pick from. A lot of these might be sold out, but you can see there are a number of them that are still available to subscribe to. They're always updating these, always changing them. For example, right now they have like USDT to BTC. You could click on subscribe now and it'll show you all the different information about it. So the thing about Sharkfin and the way it works is, so you could see right here that it says 7% to 10% APR. 7% is ultimately the minimum you would receive in this scenario. And in their deep dive, where they talk about how it works, it says how Sharkfin is a principal guaranteed structured product with a lockup period. It combines a high annual percentage rate with financial derivatives, highly popular with crypto markets, and ultimately the principle of Sharkfin is to limit and mitigate the effects of price volatility that investors face. It guarantees investors higher yield only if the asset's price stays within a specified range. So let's do an example. You can see this example right here. It says that the minimum APR is 7%. The maximum is 24%, and the guaranteed is 5%. Ultimately, the way it works is that if you subscribe to Sharkfin and you pick a different investment product, as long as it stays within the range, let's say for this example, that ranges between $20,000 and $22,000 per coin for Bitcoin. As long as Bitcoin stays between this range, well, you're going to get a minimum of at least 7% and a maximum of 24%. They go into how you could calculate this exactly, but the more important thing is you can just say, you think the market is going to be between 20,000 and 22,000 for the next 7 days. So as long as it ends up performing that way, you would get a minimum of 7 and a maximum of 24% on your investment. The thing that's cool about this, though, is that let's say it drops below, or let's say it goes above, you still have your guaranteed 5%. So that's something that makes it more exciting because you can bet on the market going up or going down. You could bet on the market like basically staying in between a certain range. And if it stays in that range, you know you're guaranteed a certain percentage. So that's something that is really cool. So with this one that you can subscribe to right now, it says your minimum is going to be 7%. That is like the guaranteed. And then if it stays in the range of 34,100 to 39,600, you'll get between 7 and 10%. So you know, look, the worst case scenario, you get 7%. The best case scenario, you get 10%. Third investment product I want to talk about is going to be something called Smart Trend. So Smart Trend ultimately allows you to bet on the market if you think it's going to be a bullish market over the next few days, let's say 7 days, or a bearish market. And ultimately, the way that this works and why I like this one is that it allows leverage fixed income assets and options. It allows you to ultimately bet on if you think the market is going to go higher or lower. Doesn't matter which way, but ultimately it allows you to take advantage of either direction of the market. And you could subscribe to like a bullish BTC Smart Trend, let's say, for example, or a bearish BTC Smart Trend. So the way that this works is, let's say you look at their bullish BTC Smart Trend. Let's say it's with a price range of 28,500 to 31,000, and it guarantees an APR of 2% to 4.89%. Ultimately, the way that this works is that if Bitcoin drops below 28,500, you'll earn the guaranteed 2%. If Bitcoin trades between the range of 28.5 to 31,000, well, you'll get between 2% and 4.89%. And if Bitcoin goes above 31,000, you'll generate their highest APR of 4.89%. So this is something that's very simple and intuitive, because it's just basically saying, do you think the market's going to go up? Do you think the market's going to go down? And if it follows the path that you think, if it performs the way that you expect, you'll just generate additional APR. And if it doesn't, there's still a minimum APR that you will generate. Next one I want to go over is called Range Sniper. Range Sniper is ultimately the fourth investment income tool that I use on Bitget, because with Range Sniper, the way it works is you can see they have a number of different bullish and bearish products. You see, for example, bullish USDT, BTC, Range Sniper, and with this, the APR is 20% to 554%. This one is a little bit more complicated because, does offer higher APR, and people wonder, well, how is this possible? So the way it works is, let's go over one of the examples from their documents. You can see, let's use a bullish Range Sniper for example. They're going to do one where Bitcoin comes with a range of $28,000 to $31,000 per coin and an APR of 20% to 382%. Let's say you subscribe with $14,000 USDT and you have 7 days. So ultimately, in case one, if Bitcoin drops below $28,000 per coin, you're going to earn their guaranteed 20% APR, and you'll be settled in BTC. So it gives you a whole entire format for that. And in case two is if BTC trades between the range that you're expecting, let's say between $28,000 and $31,000 per coin, well, then you can earn as high as that 382.9%. They give you a whole entire formula how to calculate that as well. Your funds will be settled in USDT. And the earning case three is if Bitcoin goes above $31,000 per coin, you'll get their guaranteed 20%. So ultimately, the way that this works is that as long as Bitcoin stays in the range that you are predicting, well, then you can earn up to that massive, massive percentage. That's why it's called Range Sniper. If it's in that range that you're betting on, well, you'll earn significantly higher returns. If it's not in that range, if it's either below it or above that range, well, you'll still get their guaranteed APR. So there's nothing really to worry about. So this is something that I really like about it, because if you are good at predicting markets, you know where the markets are going, you know, maybe there's some big events coming up, there's things to be excited about, and you're expecting some major catalysts, well, this could be something that you could use as well. The fifth investment tool that I do use is called dual investment. This one is very, very simple, because ultimately there are only two different ways that you can go about it. They have two different products called buy low and sell high. It's very simple, because that is what most people like to do in the crypto space, and that is what their two investment products are named. So the way that this works is with their buy low product. Ultimately, let's say you subscribe to BTC USDT buy low product with a settlement price of 20,000 USDT, 7 days, and an APR of 50%. If Bitcoin's price drops below $20,000, you will receive your settlement in Bitcoin. If Bitcoin's price stays above $20,000 during these days, you will receive your settlement in USDT. And they show this all right here. There's a formula of how it calculates this, but ultimately just think about it that way, that if you're doing a buy low product and the price ends up settling higher than what you were expecting, then you will receive your settlement in USDT. If it's lower, you receive your settlement in BTC. Obviously, you generate more returns, and it is more profitable if you see that you are correct in your guess. But that's basically very, very simple. It's either the buy low or sell high. Simple, and you can check out all the formulas. And the last earning feature that I want to go over is called Bitget Snowball. Bitget Snowball is something that's pretty cool because it allows you to leverage guaranteed principal into a wealth snowball. It is exactly as it sounds. Ultimately, if you have a bullish prediction, so when you're looking at all their different options, and they'll say like bullish USDT to ETH snowball or bearish USDT to ETH snowball, if you predict correctly, and let's say you have this bullish USDT to to ETH Snowball. And let's say the price continues to go higher and higher. Ultimately, it allows you to generate more return. So with an example that they show, let's look at the bullish and the bearish. With the bullish scenario, let's say the start price is at 28,500. There's going to be a knock-in price and a knock-out price. These are the things that are really important. So with the knock-in price, every single day there's going to be an observation period. And if each day you see that Bitcoin goes and hits that knock-in price, well, you get additional 3% APR. So in this example, we scroll down a bit, you'll see that there's, let's say on day one, nothing happens, it just doesn't hit the knock-in price or the knockout. So your APR is going to be 0%. Then on day two, it hits that knock-in price, you get an additional 3%. Then on day three, it hits that knock-in price again. You're going to get an additional 3%. Now you'll be at a cumulative 6%. Day four, nothing happens. So you remain at 6%. Day five, you get another knock-in, it hits that knock-in price. Well, then it gets to 9% and so on. So you can see that then at the end of the period, if it hits that knock-in price multiple times and doesn't hit the knockout price, well, then you ultimately generate additional returns. It just continues to compound on one another. A different example, though, is let's say you have a few different knock-in periods. And let's say there's an investor A and investor B. So with investor A, let's say it hits the knock-in price and you get that 3.5% APR. Then it happens again on day two. So now you go from 3.5% to 7%. It's compounding on one another. Then on day three, you get it again, another knock-in price where it hits that price you wanted to see. Then you get up to 10.5%. Investor B decides to redeem it, and they are at 10.5% APR. But investor A continues to stay in, and they end up getting, day four, nothing, day five, another knock-in period, so you get another 3.5%, day six, another knock-in, and then day seven, knock-out. So ultimately, the way that you have to think about Snowball is that if it hits a knock-in price, you get that APR added cumulatively to your total. If it hits the knockout price, it settles immediately at 1600 UTC the next day. So it ultimately limits your risk, because if it drops, you're not going to be continually losing percentages. You're not going to lose money additionally every single day. But when it does hit that knockout price, ultimately then you just settle your funds. It happens instantaneously, and that's the way it goes. So ultimately with Bitget, there are these 6 main investment products that I use all the time. And like I said, for Bitget, this is the main feature I use. This is why I keep so much of my crypto on Bitget, is because of their earn features. They have all these different ways where you can earn APR on your crypto holdings, and it doesn't require you to trade it every single day. A lot of these different features have guaranteed APRs simply for using the tool. So even if you're not great at predicting market movements, well, you still have guaranteed rates that you can generate simply from, let's say, flexible savings or from some other investment features that they have, with SharkFin. So these are something that are really cool. Last thing I do want to go over is just going to be with something that Bitget has currently going on, something that they've been doing for quite a while with their charity initiatives. I think this is pretty cool. Bitget has something called the Blockchain for Youth project, and they talk about all of this in one of their press releases. Bitget's Blockchain for Youth project debuts educational blockchain courses. Ultimately, what I like about this is that Bitget is adopting a 360-degree approach with plans such as online blockchain courses, online lectures, hackathons, scholarships. They're going to be investing $10 million into people over the next 5 years. And ultimately, they're just trying to give back to the community. This is something that I personally like, because I like to invest in a project that is also giving back in the community. I like to use platforms that are actively, growing with the community, teaching people about crypto, teaching people about how to invest and how to make money. And that's exactly what Bitget is doing.